we've made a great deal about, Europe closing at a record for the fourth month in a row. There's a gush of money coming in. $1 billion came into one of the ETFs just the other day. I want to get a sense. You have an acronym, Q, G, A, or P. Quality growth at a reasonable price. Is Europe the land of quality growth at a reasonable price?
Yeah, we think that this might be the sweet spot for investing at the moment, going for as we go into the second half of the year. What we've seen in the first half is a lot of focus on growth versus value, and people have pitched some of the high growth names, often in the US and Asia, with very high valuations and high level of long-term growth, up against some of the value stocks, so things like energy and financials and industrials, which tend to be in Europe. And that's been really the battle we've seen in the market over the course of the first half of the year. Now, as we go into the second half, we think that both sides of that trade might start to get a little bit shaky if the market starts to worry about inflation. High growth stocks obviously don't like it when yields rise. Value stocks might not like it if investors are looking for long-term growth. So we think that this sweet spot in the middle, where you're looking for companies which are offering growth, maybe not super high growth, but growth nonetheless, attractive dividends, high quality companies that can raise their prices over the course of the cycle. And we think that this could be the sweet spot as we go into the second half of the year, which we think will be characterized by still low levels of interest rates, growth probably coming off its peaks, but some lingering concerns perhaps about long-term rates of inflation. So we think that quality growth at a reasonable price, or QGARP, is going to be the place to be.
Kiran, just very quickly, where in Europe is this? Is this a FTSE 100 play? Because I know you pointed to the fact they have very strong first quarter earnings.
Yeah, so we picked the theme across a variety of countries in Europe, so it includes a lot of quality names, whether that's in the luxury goods space or the consumer staples or consumer discretionary, some of the industrials as well. So we're just looking for high quality names, regardless of the sector or country that they fit in. And really our key criteria is just their ability to deliver growth over the course of the cycle, but also be valued at a reasonable level. So that's really our key criteria, and we think that's the kind of stocks that are going to get of increasing interest to private clients in the second half of the year.